Bitcoin, if you believe what I believe about Bitcoin, that it is digital property, it is a store of value akin to gold, it is the future of value storage, then the United States should hold it. And if the United States holds it and buys into it now, and I'm right, or Saylor's right, that it could trade to $1 million, or in Saylor's case, $13 million, the United States would be very well benefited by having this asset on its balance sheet. And I applaud David Sachs, frankly, for understanding this, but I also applaud his gradualism. Because if he said Donald Trump is going to sign an executive order, we're going to buy 500,000 Bitcoin. We are in such a polarized society.
Certainly.
We may end up having the next person say, okay, I'm signing an executive order, we're going to sell 500,000 Bitcoin. We don't want that. So I think what Sachs has done is very prudent. He's trying to get a bipartisan commitment. We don't debate in this country gold. In other words, there's not a Democrat that says sell the gold and a Republican says buy the gold. We accept that gold should be in our...
In the crazy world of cryptocurrency, maintaining control during a crash is more important than shouting loudly during a bull run. Bitcoin is a revolution in slow motion, not just a trade. Few people are more aware of that than Anthony Scaramucci. Scaramucci recognizes an opportunity while others are frightened by headlines and corrections. The evolution of money itself is why he is interested in Bitcoin, not the hype or the headlines. Imagine a time when $400,000 per coin is not just a pipe dream, but a significant milestone, and Bitcoin becomes the foundation of world wealth. Scaramucci is not merely making predictions, he is placing his legacy at risk. He is aware that those who hold when others fold will reap the true rewards. This is about putting yourself on the correct side of history, not just about making money. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
And it's about other people's odysseys, whether it's a Stan Druckenmiller or a Ray Dalio or a Paul Tudor Jones or a Michael Saylor. Many of these people start out as skeptics of Bitcoin. They don't really understand it. And then if they do the homework on it, I submit to your viewers and listeners, if you do the homework on Bitcoin, you generally go towards it. Say if there's 100 people and they're super smart people, very intellectually curious, and they said, okay, I'm going to spend the next 6 weeks learning about Bitcoin, meeting people like yourself, reading everything, the white paper, going to talk to core developers of Bitcoin. When they're done, they will generally be a Bitcoin proponent. They will generally go towards Bitcoin. I would say of 100 people, 95 will do that. Maybe there'll always be 5 people that'll be the skeptic and hate it no matter what. But to do the homework is to go towards Bitcoin. And I started doing the homework. But even then I was nervous to buy Bitcoin. I was an institutional investor, had lots of clients, had the wirehouses as clients. Bitcoin was speculative. Bitcoin was volatile. You know, I think it peaked back in 2017 at like 20,000 and then it crashed after that. And so now I was looking at these prices. I was like, wow, this is things like an 80, 100 vol security, asset, token, whatever you want to call it, commodity. Because it's too dangerous. I don't want to buy it. So I wrote down 3 things. I said, if Bitcoin reaches these 3 things in my mind, we're going to buy Bitcoin. Number 1. Will it scale? Will it get to 100 million wallets? Number 2, can I get comfortable with U.S. regulation of Bitcoin? Can I get comfortable with the future regulatory environment for Bitcoin? And then the third thing is, where can I store my Bitcoin? Because as an older person who's a little bit technophobic, I didn't want to have a cold storage wallet with my own catchphrase. And if I'm going to buy 9 figures of Bitcoin for my institutional investors, where can I put the Bitcoin? And so 1, heading towards 100 million wallets, maybe 80, 85 million wallets, getting towards the end of 2020. Number 2, the IRS deemed Bitcoin tangible property. So I didn't learn a lot in law school, but I did learn one thing, that property in the United States is sacrosanct. You can come with a Democratic president, a Republican president. We have 900 years of legal precedent dating back to the Magna Carta, of common law precedent on the integrity of property and the sanctity of property in the United States. And so if Bitcoin is deemed intangible property by the IRS, it's going to be very hard to take it from you, okay, without representing fair values. It'd be very hard to make it illegal in the United States. And so even though the regulatory environment wasn't fully articulated, I said, well, that is a precursor for a favorable long-term regulatory environment. And then the third thing, of course, is Fidelity was offering storage. NYDIG was offering storage. Coinbase Pro was offering successful bells and whistles. Places like Bitwise are now like that. There's a great study. If you bought the breaking news, catastrophic CNBC news stories, if you bought them, you like tripled the return of the market, meaning you got to buy on those really, really bad days. Every time they're out there saying that the world's coming to an end, you got to step into the breach and buy, you know. The 2022 situation with Bitcoin was a little bit more unique because there was some fraud going on in the system and there was excess leverage in the system. And so when the fraud was exposed and the leverage was punctured, the bubble really came down fast. If you said to me in November, when Bitcoin was 69,000, if you said to me, yeah, you know, we're at 69,000, how low could we go? I was, oh, you know, could correct 40%. You know, you go from 70,000 to call it 42,000. You know, that's a 40% healthy early stage technology volatility curve. But you corrected from 69,000. You know, there was a flash print at 12,000. I don't know if people remember this in January. It flashed down to 12,000. And so this was extraordinary pain. And this is a big lesson in an asset like this. No leverage. Don't hold it with leverage. Because the leverage, to quote Warren Buffett, is like a spear coming out of the steering wheel. You're in a very fast sports car. And you're driving on an icy road, a mountainous road in Switzerland. And it's icy. And you're in the sports car. When you need to brake, this is when the leverage is going to hurt you the most. And so I didn't own any of this stuff with leverage. But the press can be mean, and the press is looking for an eyeball.
Anthony Scaramucci is the ideal illustration of how Bitcoin has a unique ability of converting doubters into believers. The seasoned hedge fund professional wasn't initially persuaded. However, he jumped all in when he observed three important factors: secure custody, improved rules, and tremendous development potential. His most important lesson? When panic is at its maximum, like it was during the 2022 crisis when prices dropped from $69,000 to $12,000, that is the ideal time to buy. Bitcoin is more than just an investment, according to Scaramucci. It's a revolution in a reaction to central banking's shortcomings, and demand is rapidly increasing. Spot Bitcoin ETFs saw new inflows of about $3 billion just last week. Bitcoin rose 15% in April alone, outperforming both gold and U.S. stocks as institutional interest increases. Market optimism is being raised in the meanwhile by encouraging signals from the White House, such as a reduction in trade hostilities and potential tariff rollbacks. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Well, I'm a Wall Streeter, so I know we have to tokenize over the blockchain. I know that the bond market and the stock market, those securities that are represented right now by QSIP numbers, which if I'm going to trade my stock from my account into your account, it's going to pass through 7 pudgy penguins. 7 different entities is going to have to catch that before it dumps into your account. So if you're telling me that there's technology available where I can put a contract on a layer 1 protocol and I can deliver that into your account, bypassing all of these third parties, unleashing a tremendous amount of cost savings, and that cost savings can go to you and me and could get dumped back into the global marketplace, the global economy, to lead to more economic efficiency, more technological development, then I want that. So I'm not a Bitcoin I am a Bitcoin maximalist when it comes to understanding the nature of Bitcoin and its store of value. But I own other coins because I do believe in the utility of these layer 1s. And I do believe what Larry Fink is saying, the CEO of BlackRock, that we are going to tokenize the stock and bond market. We're not going to do that on Bitcoin. Could we do that on Avalanche? Yes. Could we do that on Ethereum? Possibly. Unlikely, because it's still pretty expensive. Could we do it on Solana? Yes. You see what I mean? So I own some of those other coins, if you want to call them coins, protocols. Well, listen, I think Bitcoin, it will help Bitcoin in the sense that if the U.S. starts buying it, the price of Bitcoin will go up. It'll force more adoption. So I don't necessarily think that's why we should do it. We should do it because it will help the United States. We should do it because Saylor is correct that if it is a piece of the operating layer of the future of transactions, if it is a piece of something that people can rely on, that can't get corrupted by central banks, if it's something that can't be monetized or inflated away, the value that's inside the network, then the network should be held in reserve. The same way gold is held in reserve, and frankly, the same way oil is held in reserve. And by the way, there are probably 27 or so things that are held in the U.S. reserve. It would include medical equipment. It would include lithium. It would include rare earth minerals, rare earth metals that the United States thinks that we need for technological preservation of our economy in the event of a nightmare, some type of warfare or something like that. So Bitcoin, if you believe what I believe about Bitcoin, that it is digital property, it is a store of value akin to gold, it is the future of value storage, then the United States should hold it. And if the United States holds it and buys into it now, and I'm right, or Saylor's right, that it could trade to $1 million, or in Saylor's case, $13 million, the United States would be very well benefited by having this asset on its balance sheet. And I applaud David Sachs, frankly, for understanding this, but I also applaud his gradualism. Because if he said Donald Trump is going to sign an executive order, we're going to buy 500,000 Bitcoin, we are in such a polarized society.
Okay.
We may end up having the next person say, okay, I'm signing an executive order, we're going to sell 500,000 Bitcoin. We don't want that. So I think what Sachs has done is very prudent. He's trying to get a bipartisan commitment. We don't debate in this country gold. In other words, there's not a Democrat that says sell the gold and a Republican says buy the gold. We accept that gold should be in our reserve. Gold should be reserved by the United States.
Anthony Scaramucci clarified that the current stock and bond trading system is antiquated and riddled with pointless intermediaries. In certain cases, as many as 7 entities are required simply to move a stock from one individual to another. Delays and additional expenses result from this inefficiency. However, blockchain eliminates the need for middlemen and saves billions of dollars in fees by enabling the direct delivery of contracts and assets between individuals via Layer 1 protocols. As a result, the economy becomes more efficient and innovation accelerates. Scaramucci likened the early days of cloud computing and energy distribution to the adoption of blockchain. People today are wary of blockchain, just as they were once apprehensive about plugging into a public power grid or storing their data in the cloud. He made it clear that although he supports Bitcoin as a store of value to the fullest extent possible, he also makes investments in other blockchains due to their usefulness. Similar to digital gold, Bitcoin is the best option for storing value, but isn't designed to do everything. Scaramucci was in favor of the United States keeping Bitcoin in its strategic reserves, not just to encourage the cryptocurrency, but also to strengthen the country. He maintained that if Bitcoin is indeed the future of digital property, the United States should retain it in reserve, much like it does gold, oil, and precious metals. Early ownership of Bitcoin would be extremely beneficial to the nation if it turns out to be as valuable as he and Michael Saylor think it will be, that is, if it reaches $1 million or more. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.